Happy Wednesday, everyone. Welcome back to another episode of Trading the Markets with Kris, Bullock. This is the show where we talk about the markets, and of course, we take your questions live. So if you have any questions for us, just throw them into the live chat on X or on platform, and we will take as many as we can. I know I said a happy Wednesday to start, but I don't know how happy of a Wednesday it is at the end of our Monday show. I was talking about how I was hoping we'd have some green candles to reflect on and look into, but unfortunately we don't. They're even redder than they were on Monday, it seems. But we have a great show for you today. We're going to take a little bit more. Kris is going to take a little bit more of a macro approach to things because that's probably the best thing we can do right now in a market like this. So we're going to be talking about liquidity. We're going to be talking about the USD. We're going to be talking about institutional holdings, this irrational 4-year cycle, and some more indicators as well that Kris wants to look into. So let's just dive right into it. And Kris, welcome back to the show. How are you doing today?
Doing well, thank you. Yes, we did have a green Tuesday. I mean, nice little bounce yesterday. I thought maybe that was the start of something, but alas, it was not meant to be. So here we are today. Yeah, I think probably what a lot of people are wondering is like, what's going on right now? Because everything just looks like garbage. I mean, it's not just crypto, it's stocks, it's everything across the board. We're seeing the dollar index surge. And so, yeah, I kind of wanted to pull up some charts and just sort of dig into what's going on there. The dollar index is basically surging today, and the market is tanking today because the BLS, the Bureau of Labor Statistics, announced not too long before the show started that they're not going to be publishing any jobs data reports for the month of October, which kind of sent the odds of a zero rate cut happening surging. Everybody was, because Powell basically in the last press conference stated that they didn't have a lot of data to go from. They were kind of driving in a fog, if you will, and now with the announcement that they're not going to have this jobs data going forward, it sent the probability of zero rate cut for next month surging basically. And so if we look at that, we can see that here on Polymarket. It was kind of going along, and then just boom, you can see that yellowish orange line just shot up almost to 60%. It was actually starting to trend back down before that announcement, and it just completely reversed. And so that sort of added fuel to the fire that we were already seeing asset prices go down, kind of just off the back of weaker jobs or weaker data, economic data in Europe and Asia, and a little bit of uncertainty like surrounding tech earnings reports like Nvidia that's supposed to come out later today. So we were already seeing a bit of a flight out of risk assets and into the dollar, which again is being reflected here on this dollar chart. And so now we've just got, this kind of big mess going on right now. And that's sending everything. It's not just, like I said, it's not just crypto, it's stocks. If we look at the major stock indices, they're all down big on the day too. Although they have stabilized a little bit, I think, after that initial surge off the announcement. So yeah, I mean, kind of that's what we're seeing. Although I am curious because the Nvidia, people are optimistic about that, and that could come out and be a little bit of a positive catalyst, but that we're not going to know that until after the markets close later today. I think it's scheduled for 4:30 or so when that report will drop, literally right as the markets close. So we'll get that information. Obviously, if that's good, that could prove to be a little bit of a bounce for tomorrow. But basically, that's what's going on right now. So if you're looking at your charts and you're wondering, why is everything red today? This is basically it, And I really kind of feel like this is going to be relatively short-lived. It's like, yeah, we might not get a rate cut in December, but I do think there's other things that are going on that could prove to be positive catalysts. In the meantime, I do think that we will get some liquidity injections coming in, which I'll talk about here in a little bit. But I'm not really too worried about this. Even if we don't get a rate cut at all in December, I still think I'm bullish for the coming weeks and months. So we'll see how it goes. But yeah, that's the short term anyway.
Right. What do you think will be that catalyst? I know you mentioned, liquidity injections. Obviously, Trump has been a little more vocal about these tariff stimulus checks as well. Is it just as simple as just getting another round of stimulus checks that, kind of turn us around, or are there other things that you're looking at for that kind of catalyst to help us bounce back up?
No, I honestly, I feel like, I mean, I'm optimistic about that, but I'm starting to see that might not even come into place until the middle of next year even, so that's not going to be any kind of a short-term catalyst. But just like basically here, let's kind of pivot to liquidity. I want to look at a few charts here, starting with net liquidity. So this is global, or no, let's start with US liquidity. So I think we touched on this last week in this same show, how I basically just been waiting. We've been noticing that as soon as QT started way back in 2021, early 2022, US liquidity has effectively been in a larger downtrend. I mean, yes, it's had a few periods of uptrend in the middle of that, but it's going on and setting lower lows and lower highs all throughout. And I think we're getting to the point now where we know QT is ending in 2 weeks. And yesterday just here on Real Vision, I was watching the AMA with Andreas Stena Larsen, Andreas and Mikkel, and they were talking about this. And Andreas was basically saying that the TGA is going to get plugged in, literally plugged back in, literally tomorrow. He specifically said Thursday of this week that it would, we'd start to see some economic activity, some funds being sort of the joints being lubricated, if you will, and so we'll start to see some money flowing in from that. And then I'm hoping that that'll be reflected here in this chart, and we'll start to see an uptick in liquidity. But I wanted to kind of look at a few things in terms of how this relates to Bitcoin and how this has interacted with Bitcoin, I guess, over the years and over the cycle. And so let's start with this net liquidity chart. I thought this was interesting because I'm going to kind of backtrack a little bit and just sort of give a little bit of a history lesson of how this last sort of 4 years has played out. So we had the first peak of 2021, where liquidity was at its highest, and it rolled off after that. And so yes, we got a subsequent peak in Bitcoin price, but by then, sort of the global net liquidity, if you will, had already been well into a declining phase and actually bottomed. It bottomed here at the end of October. Coincidentally, it bottomed literally the week before FTX collapsed. So liquidity was already starting to reverse back up, but we got this huge flush out in Bitcoin and in all of crypto because literally FTX collapsed the very next week. And so that sort of threw off the sync, if you will. We were already starting to see a little bit of a rounding up of price, that was sort of corresponding to this reversal in liquidity before we got that. And so that kind of threw crypto off for like a solid month and a half before it kind of synced back up again finally and was starting to trend up with these uptrends. Notice we had a little bit of a peak here that corresponded with a peak here, another peak here that also corresponded with a peak here, and then liquidity tapered off again. But in this span, starting right about here is when we got the announcement of the ETFs. And then a little bit further on, we got the approval of the ETFs. And so even though sort of global net liquidity was trending down during this time, this was enough strength just from like Bitcoin alone, to kind of allow it to break away from the liquidity, from being so stuck to liquidity, and break away and kind of go on its own little trend here, because it had institutional inflows coming in that it didn't really matter what liquidity was doing. It just had big money coming in. And that finally peaked out, in March or April of 2024. And then after, off the back of this big, like 100% rally in Bitcoin, it basically needed to consolidate for like 8 or 9 months, which I know we all remember vividly as we went through that. And then liquidity again bottomed and started running up right around the time we got like the meme coin craze that kicked in and sort of started fueling everything. And then that sort of led into Trump, it looking like maybe Trump was going to win, and Trump becoming the sort of crypto president, which further served to juice the markets and rally them into the beginning of the year. I'm getting somewhere with this, I promise. And so, then we had a bottom in liquidity again. We had the tariffs and that nuked everything. So even though liquidity had bottomed here in, say, December, and had been running up for most, the better part of 6 or 8 months, we had the tariff coming in that was, again, caused crypto and risk assets to break away from the liquidity regime a little bit. And so it was going counter to liquidity until finally it bottomed in April and has been running up. Now, here, that gets us to June or July of this year. And I've seen a number of people say, we actually peaked. They're even saying like the 4-year cycle peaked in July. and I can kind of get where they're coming from with that. We did have a break in momentum. We did have, yes, we did go on and set higher highs in October and even in August slightly, but liquidity tapered off. We had major like DMARC 13 on weekly indicators around the July timeframe, and we saw everything kind of dip back down. And so those people are like, oh, cycle's over, everything's done. But as we can see here, liquidity has bottomed and has reversed back up now. And and I wouldn't even call it like a little bit of a mean reversion even. Like it's a true trend reversal at this point, and it is kicking back up. It's continuing, and now we're seeing it sort of heavily broken away from the price of Bitcoin right now. It's going completely counter to it. Another interesting thing is the sort of just a series of higher highs and higher lows. Like we had a liquidity peak here, in May that was here. We had a higher peak here in September, an even higher still peak in July. Same thing with the lows. Ultimate low, higher low, higher low. We could all arguably call this a higher low as well, meaning that it didn't even really dip into the negatives. And it's now, gunning for a new higher high. So I'm looking at this here, and then I'm looking at the price of Bitcoin, and I'm thinking something's got to give here, and I think we know that liquidity is gonna win this bout. And so I really think that this is just one indicator of why it's only a matter of time before we see price kind of fall back in line with what's going on with global net liquidity. And so I'm reasonably optimistic based on what I'm seeing here. And I know that, I think once the US kind of kicks into gear, because again, if we go back to US liquidity, we can see that it's really been in a downtrend this whole entire time. Even though we were getting sort of global net liquidity on an increase, the US side of things has been not really contributing to that very much. And if we look at it even like on a year-on-year basis, we can see it even still. We're basically in the negative still. So I'm looking for this to reverse, both on a year-on-year basis and sort of on an aggregate basis. And I think that maybe that's going to be the key kicker for when Bitcoin finally reverses. And so that's where I'm at. That's what I'm waiting for. And again, based on what everybody's saying, all the macro people that we follow, particularly Andreas yesterday, I thought that was a great AMA that he did, that both those guys did. And I'm confident going forward, but we'll just have to wait a little bit longer. We're like right there. We're so close, but it's not happening quite yet.
I mean, that was a fascinating history lesson, Kris. And it's also, it's pretty crazy to see how tied Bitcoin's price action to the US liquidity is
Right.
overall. So, right. Because like right now, even on this chart that you have up, it's trending down, price action is trending down. They're just like almost matched. It's like in a perfect little dance with each other. So honestly, I don't know how we can look at this chart and not be pretty bullish, because we know that the liquidity is going to turn around. So
Right.
if it doesn't break off from it, kind of like it did briefly in the global liquidity chart, I mean, we should be game on pretty soon, right? Am I right in thinking that, or am I getting kind of ahead of myself?
Yeah, no, I would think so too. Like I said, I mean, we know global liquidity has sort of, it's generally followed it. That's why it's sort of up as much as it is, But I think, again, through all of this, the US has not been a major contributor in that equation, outside of a few, sort of counter trend rallies, like I said. I mean, again, if we go back and look at sort of the year on year, we can see that there were periods where year on year, it did go on uptrends, shorter term uptrends. That kind of matched again with these trends here and like this trend here. So it's played a role occasionally along the way, but it hasn't played an outsized significant role in sort of this 3-year rally, that 3-year bull run that we've had. So I can only imagine what happens once the U.S. does in earnest start actively, injecting liquidity into the system. I think that we could see. I mean, I'm not going to say we're going to, but I'm just saying, and I'm not saying it's going to do this COVID-like injection, of course, but we could see pretty significant rallies in the price of Bitcoin and other crypto too. Even like going back to 2017, I mean, crypto already ran a fair bit, like through 2015, 2016, even though liquidity was kind of trending down, like year-on-year net liquidity, similar to how it has been now over the same sort of early stages of the longer bull run. And then, starting in late 2016, it, year on year started to increase, and the price of Bitcoin just, again, blew up from there. So A reason to be optimistic, I guess you could look at it that way.
I'm going to look at it that way. We need all the optimism we can get, so that's the only way I will take it. Want to take a question here? We did
Sure.
say it could be a little bit more of a macro focused show. So we did get a macro question here from Mapex. What are your thoughts, Kris, on the threat of yen carry trade unwinding?
I that's way out of my wheelhouse, unfortunately. So yeah, I can see my face froze on the monitor. I don't know. I can't really. I'm not worried about it. But the only reason I'm going to say I'm not worried about it is, again, I'm going to defer back to the AMA with Andreas from yesterday. He addressed that question far more eloquently than I could, and in the end, to him, it was not a huge factor that is going to cause any major issues. So, I'm not so much of a global macro expert to the degree that which he is. So yeah, I'm going to defer to Andreas on that. But again, based on what he said, I'm not super worried about it. I don't think it's going to be a big deal.
Yeah, great shout out to go check out Andreas's AMA from yesterday as well.
Yeah.
He covered not just that, but he covered a lot of things and
Yeah.
took a lot of questions from the community. So definitely recommend you guys go back and check that out. And we're gonna have an AMA tomorrow with Raul and Julian as well for members. So you'll definitely want to check that out and ask some questions. Kris, so we looked at a few charts on Monday that looked. I mean, I know it's really hard to take a trade right now or with any level of confidence, really. But we looked at a few charts that looked pretty good, or that were at least holding up better than the rest of the market, like the BNBs. Hype was looking pretty good. XRP was also looking pretty good. So from I guess from those three charts, and I might be missing one that we also covered that we liked as well. But I guess from those three charts and those majors considered, what would you like the best right now?
Well, let's look at hype. Let's start with that. And I'm kind of just going a little bit off the top of my head. Hype actually looks, it's held up the best, or one of the best, as far as most crypto assets, but especially I'm going to consider hype one of the majors at this point. It has held up the best. It has sort of gone down the least. It's sort of held its support level the best. And I think that, once the money starts flowing again, it's likely to run up more than most, because it's one of the stronger assets, as we've talked about already. We know. It's funny though, in terms of a setup, it's not necessarily that oversold, I guess, compared to some other stuff. Not even compared to Bitcoin. Even if you look at Bitcoin, I mean, it's just been kind of down only for quite some time. We've got a big fat DMARC 9 here. We've got bullish divergence flags popping up. It's very oversold, so it's likely even to get a little bit of a bigger bounce out of it. And a lot of charts look like this. I mean, Ethereum probably the same thing. Well, yeah, I mean, pretty much not quite as bad. A good bearish divergence here. I think Solana, yeah. So, I mean, they're all really just ugly and down. Where again, if you go back and look at hype, it's just kind of flat and steady. It doesn't look like that at all. So I like the look of hype, but honestly, I think everything is likely going to bounce to some degree or another. Some things will definitely bounce more than others, but I think we're going to see green across the board and pretty good amounts of it. We're going to see likely double-digit gains coming out of this once everything rallies, literally on everything. And so the ultimate question becomes, I think more the question is, how high is the bounce ultimately going to be? Whether it just kind of comes back up and does it just, well, here, let me kind of kick on a couple of moving averages real quick instead. So we got the 20-day moving average here. This is going to be a big one I'm looking at. This is at about 100, 101,000. That's going to be the first level where I'm like, is it just going to come up to here and get rejected and bounce back down? Basically just do a mean reversion in a larger downtrend and get rejected and roll back over again. We don't want to see that, obviously. We want to see it come back up above this 104 and even kind of get back up into the 110, 112. Another thing I'm looking for with Bitcoin is we've got a bit of a trend line here. And let me kind of identify it let's go back to the daily. We've got a bit of a trend line here that I want to see broken pretty quickly, and that's this. We've got these kind of right here. And so I don't want to see us basically come back up to this trend line here and just get rejected off of it, similar to like this 20-day moving average, get rejected off of it and roll back over. To me, that's going to be a really ugly sign. So those are going to be the first signs of trouble that I'm looking for is let me kind of clean this up, is a rejection sort of at those levels. And so if we can break above here and break above here, get above 104 and start to show some constructive continuation back to the upside, then I'll feel pretty good about it. But I'm really wary because I know there's a huge contingent of people out there who are all but convinced that the 4-year cycle top is in, and they're going to be looking to sell on the first bounce that they can to sort of get out and recover, any gains and capture any gains and things like that. And so there's going to be a fair amount of selling pressure, which honestly I feel like is pretty irrational. And but it's going to be tough to weather through that. And so I think another thing real quick that I'll be looking for to kind of guide us is institutional holdings. And we did see an uptick in institutional holdings in treasuries because MicroStrategy bought a bunch of Bitcoin, like 8,000 Bitcoin. And so we did see an uptick from the treasury side, but we were seeing a leveling off, at least from the ETF side. But if you look at just sort of the net total institutional holding, it has ticked back up. And also we can see, and I did touch on this a week or two ago too, that, institutional holdings haven't really, it's not like they're dropping precipitously. They're not tanking, ETFs aren't setting new lows or anything like that. If anything, they just kind of came back down to early September levels, kind of back here, and they're starting to trend back up. Meanwhile, again, Bitcoin is continuing to tank. And so this is another reason why I remain optimistic, is I'm not seeing institutions selling at a rate that is sort of in proportion to the decline in price that we're seeing with Bitcoin. So I feel like this is all just 4-year cycle doomsdayers that are, liquidating their positions and getting out. And I feel like once we get through that, once we can kind of push through that and flip that psychological barrier, I think that'll help things to run back up again. And hopefully we'll see ETFs kind of kick back in too and start contributing to that, because that's what's going to help, I think, push the price back up above these levels too. And I don't think that largely, to a large degree, institutions and ETF buyers even are in that contingent of people who are convinced that the 4-year cycle top is in. I think it's more like OG crypto native people who have been in it for all these years, who have been studying the charts and are totally just stuck on this cyclical pattern that we've been following. And that's what's going on here, and also some whale selling, sure. But I think it's just this psychological kind of nonsense. And I think that we just need to break through it and keep going.
There you have it, everyone. That's going to do it for us today on trading the markets. Got some optimism, so that's good. Ral is going to be back today for his famous Drinks with Ral AMA. So that's today at 5 p.m. ET. So make sure you tune in for that as well. He'll be talking, everything from his favorite wine and snack pairing to what's going on in the markets and what he's looking for going forward. So definitely going to be worth tuning into. And again, Val and Julian are going to have an AMA tomorrow for members as well. And Kris and I will be back on Monday to talk more of the markets. And hopefully this time we have some actual green candles to talk about. Kris, what is your don't fuck this up lesson that you're going to be taking into this weekend before we see you again on Monday?
Absolutely don't sell right now. Never. I think we're just at the bottoms, basically. We're at lows. This is when the freak out is max, and people are just capitulating and panic selling. And this is literally the worst possible time to sell. Again, even if, and I don't think it is, but even if the 4-year cycle peak is in, we will see a decent bounce out of here. And if you want to sell into that, but don't sell at the lows. Don't capitulate at the lows. You're just going to be kicking yourself. So yeah, just stay put, stay calm.
This isn't Wall Street bets here, guys. We don't buy high and sell low. All right. So let's keep that in mind. Well said, Kris. All right, guys. We will see you again on Monday, and then of course again next week. Until then, don't fuck this up, everyone. Have a great week.